Imagine a world without credit cards. No tap-and-go payments. No online shopping. No buying something today and paying for it later. For most of human history, that was normal. But today, credit cards are everywhere. Billions of people carry them. Businesses depend on them. Banks profit from them, and entire economies run on them. So how did a small piece of plastic conquer the world? And why are credit cards one of the most profitable financial inventions in history? If you're interested in money, business, and the hidden systems that shape our lives, consider subscribing. New documentaries are released every week. Before credit cards existed, people mainly used cash or checks. If you wanted to buy something, you needed the money first. This naturally limited spending, but it also limited convenience. As economies grew, businesses searched for ways to make spending easier. The breakthrough came in the 1950s. According to the popular story, a businessman named Frank McNamara forgot his wallet while dining at a restaurant in New York. The experience inspired an idea. What if people could carry a card instead of cash? Soon after, the first major charge card was introduced. Customers could buy now and pay later. The idea spread quickly. Consumers loved the convenience. Businesses loved increased sales. Banks saw a massive opportunity. Over time, credit cards evolved from a convenience tool into a global financial system. Today, every time a customer uses a credit card, multiple companies may earn money from the transaction. Banks, payment networks, processing companies. The simple act of buying a coffee can generate revenue for several businesses behind the scenes. But transaction fees are only part of the story. The real profits often come from interest. When cardholders carry a balance, they pay interest on the money they borrowed. And those interest payments can be extremely profitable. This is why credit card companies spend billions attracting new customers. The business model is powerful. The more people spend, the more opportunities exist to earn fees and interest. But credit cards also changed human behavior. Research has shown that people often spend more when using cards compared to cash. Why? Because handing over physical cash feels different. The pain of spending becomes less visible. A simple tap can make purchases feel effortless. This psychological shift transformed consumer spending around the world. To be clear, credit cards are not inherently good or bad. Used responsibly, they can provide convenience, rewards, fraud protection, and financial flexibility. Used carelessly, they can become a source of long-term debt. Like many powerful tools, the outcome depends on how they're used. The story of credit cards is really the story of modern commerce itself. A simple piece of plastic changed how people spend, how businesses sell, and how banks generate profits. And today, it's difficult to imagine the modern economy without it. The next time you tap your card to pay for something, remember, behind that simple transaction is one of the most successful business models ever created. If you enjoyed this documentary and want more stories about money, business, and the hidden forces shaping our world, subscribe and join us on the journey to 1,000 subscribers. Thanks for watching.